What's going on, everybody? So I have some time here before I get busy with a few personal things in the evening. So I wanted to get this market update out of the way, make sure everybody has some reliable trade ideas through the next coming sessions and understands what's going on in the markets and what our focus is on. So welcome to a Capital Hungry Market Update webinar. Currently 5:40 p.m. Eastern, end of the North American trading session, Monday, June 6th. Now, we're still looking to extend our same bias as we've been adapting to the sells on gold and still continuing the buys on GJ and potentially looking for dollar strength to come back into play, looking to play the shorts and downside move on GBPUSD, EURUSD, with USDCAD I'll talk about individually after. And we're also looking to identify any potential exhaustion by stock market buyers when we're looking at US 30 stock market index. So we're going to be going through pretty much extending the same trade ideas from the previous market update webinar on our dollar pairs. On GJ, we're adapting to new price points of interest, but still extending the buyer bias. On gold, we're extending the sell bias, but adapting to some new price points of interest. So before we jump into the analysis and understanding of market sentiment, we just want to understand what events we have on the table here. We have some household spending data from Japan at 7:30 p.m. Eastern. Won't have too much impact, more than likely still keep Japanese yen relatively bearish, with Bank of Japan's comments on not looking to tighten their monetary policy, still holding a lot more weight in keeping the Japanese yen bearish. Then overnight, midnight period, just a bit past midnight, we have the Reserve Bank of Australia interest rate decision, where, of course, like major central banks, Bank of England, Bank of Canada, Federal Reserve, Reserve Bank of New Zealand, the Reserve Bank of Australia is expected to increase rates. And the focus is going to be, of course, on the statement and how hawkish the Reserve Bank of Australia is in terms of what they're looking at moving forward in the future of their monetary policy. Then 2 a.m. Eastern, pre-London hours, Germany industrial orders monthly, expecting a rebound from the negative 4.7%. I personally think this data is going to be worse than the poll, but a bit better than the prior, as the prior data was very bad, and I could see a slight recovery from that area. 3 a.m. Eastern, London open, some industrial output data for Spain will be having an impact on euro pairs overall, expected weaker data. Majority of the industrial and manufacturing sector within euro is declining, especially coming out of that overheating phase when we were first coming out of lockdowns, and overall seeing more signs of a potential recession looming in the eurozone. So then some PMI data for UK, 4:30 a.m. Eastern, with some reserve assets total information as well. This PMI data is relatively low at 51.8, which was the prior figure. The forecast is always the prior for this. So if this is below 51.8, we can see that potentially lead to a pullback when we're looking at a pair like GJ from these intraday highs, a very short-lived pullback with yen weakness still keeping GJ, the pair, relatively bullish. Or if it's any better than this, that can continue our GJ buy bias. Now, this can bring a little bit of indecision if the data is good when we're looking to play GBPUSD sells. But as long as GBPUSD doesn't break that sell price sensitivity area of interest, we will highlight again on the intraday timeframes. Then more than likely, even some optimistic data on GU will be short-lived, especially if we see dollar trading back above 102.5, showing us a lot of sellers' exhaustion from the retest of those previous highs. Then we have some sentiment reporting data from Eurozone, expecting a little bit of a recovery from the prior figures, but well into the negatives, very poor data overall. Then for our North American trading session, 8:30 a.m. Eastern, international trade balance for both CAD and USD here. More than likely, we'll have a very short-lived impact and something that we can negate. Also at 10 a.m. Eastern here, the IVPMI data for CAD And then some consumer credit reporting in the afternoon for the US at around 3 p.m. Eastern there, with some Asian data later on being the Japan GDP. So, of course, we're already well aware of a Reserve Bank of Australia's interest rate decision. Other than that, it looks pretty quiet in terms of not expecting any planned central bank speakers or any big politicians speaking that can be having impact on the markets. So just keep an eye out for anything reactive in the newsroom, of course. Now, on dollar, we were basically just shy of retesting those previous intraday highs and showing a lot more exhaustion by sellers in this 101.5 area here, where if we break above that last Fed interest rate decision price and are trading back above 102.5, it does look like buyers are coming back into the market to be revisiting these higher time frame highs, still playing the macro bullish fundamental bias on dollar with that aggressive rate hike cycle being priced in. And we can see how much impact on the macro scale the central bank decisions have, with the Feds being in a more aggressive rate hike cycle and the dollar being very bullish on the higher time frames, and the Bank of Japan being very dovish and giving confirms of how dovish they are and how they're not going to be tightening policy anytime soon, and how bearish the Japanese yen is. So a key point for me to validate a lot more dollar buyers in control and still playing the dollar bullish bias is holding above 102.5. But even any retest to 101.5 and failing to break is still bullish at this point on the dollar when we're looking at the higher time frame structure and the overall macro sentiment. Of course, with what I'm saying there, with Japanese yen breaking below those previous lows, printing new lower lows on the intraday timeframes, we have the potential to dig a lot deeper after we had this aggressive pullback to collect more sell side liquidity. And we do have the Bank of Japan giving more dovish confirms in the previous night. So I would either just be looking for a pullback on the yen to revisit these lows or just continuations down. But nonetheless, I still want to play that bearish bias on the yen and continue our GJ bullish bias. Volatility index is just ranging at these lows, but still relatively flat. On the other end of the coin there with equities, we didn't see any major upside moves either. We just have US 30 here in a bit of a consolidation zone in order block, showing us a lot of exhaustion from these previous lows roughly and around that 33,500 key level. But we know to validate that exhaustion and buyers liquidating out and more sell orders flooding the market, we would need a break below this price sensitivity area around 32,600 to confirm a lot more sellers in play. If I can see dollar trending bullish again and still seeing an outflow in gold as an asset class, then it does show me the demand for buys and the equities are starting to drop there. And if we break below 32,600 with those correlation confirms, can easily see this bearish market and corrective phase on equities continue even deeper. And it's very normal that we have these periods of minor consolidation or a little bit of exhaustion from the buyers coming into play, even after seeing such a large bullish candles that can really fake out a lot of people to be longing into the stock market, like in terms of the higher time frame, or thinking we're going to have long-term buys back in play. But majority of those moves get faded out. And right now we have to take it level by level, where we are identifying that exhaustion around this 33K flat area. So with that being said, now on gold, we had our trade ideas play out on a dime for the 1855 key level sells, scaling back below 52, where during our New York scalping session, obviously during the London session and pre-New York, we had the 55 retest for anybody who took that. I also took that trade as well. And then we had the 51 break below this price sensitivity area with confirmed of also holding below the 52 key level. and the 48 safe trades all the way down to almost around 1840 flat here. So we are seeing that our macro analysis is still being very much respected, meaning from these low points, what we've been playing is a pullback phase. And from a retest of these previous lows in that price sensitivity area we identified, we can clearly start to identify that exhaustion by buyers and that higher probability of more sell orders being collected, especially as we've been riding this bearish phase from the previous weekly candle close, still closing very bearish below that price sensitivity area. And we were just expecting this new weekly and daily candle to make a bit of an upper wick before continuing down even further bearish there. So now if we start to see with how this candle's closing nice and bearish, the rejections and double top here, which signals to us the retest of this previous price sensitivity area, buyers liquidating positions and more sell side liquidity being generated. If we have those macro sentiment confirms of dollar buyers back in the scene, equity starting to exhaust and the buy volume starting to fade out, and of course getting the technical confirms on gold of holding below 45 or even if we get a retest of 48 at this point, it'd still be really bearish. Like even if we got a retest of this price sensitivity area with some of this intraday bearish market structure we are starting to form, we still have nice target points of these 1828 prior lows, and then obviously the safer sells below there. And it's not just that. I talked about this in the previous market update webinar. It's really nice how this upside move got faded out in an equal number of candles and how we started to adapt in this candle here. And then of course the continuation this week and how we can really see that exhaustion by buyers failing to break around that 1868, 1870s area. So what I was looking at is, first I would be seeing if we just create a bit of a support that we could have deeper pullback plays, which is very normal. You have this large impulsive move, pretty aggressive correction coming from around 1847 all the way to almost 1858, like 100 pip pullback in relation to the aggressive downside move. So I wouldn't be looking for any short-term buys really, just identifying potential pullbacks for the continuation sells. I would watch around 1845 because we do know when we trade gold in the intraday timeframes or scalping, these historical key levels do have some great reactions. So based on price action, if we were just to reject around 1845 and have a very short-lived pullback, we could easily just see the continuations down, or I'd be waiting for that pullback or even a minor lower wick and the breaks below 1842 and 1836 sells. Obviously, if we have this upside move pullback, more sell orders collected in the market and rejection, and then we start to drive down, very similar to like how you had this double top pretty much at 55. And then as you're having the more sell side orders collected, once you break below 52, you can start to scale down. And the same thing with 45, with us taking advantage at New York around 51 and 48 called out. But at this point in time, I would only be looking for gold buys if we had a fundamental reason for more demand in gold, or if first we have our sell analysis play out, we come all the way down to those previous intraday lows, don't break, which we could easily see an aggressive pullback phase occur. So maybe if we come all the way down to 1828 key level in this previous price sensitivity area, I'd see buys, but that would still be following our main bias here of the sells playing out first. Otherwise, I would only really be looking for buys at this point, breaking above 1855 with some fundamental catalysts for some more demand in gold, or at least seeing a lot more price action above 1855. So this is my main bias, and then the adapted bias would be only above 55. It does look like we have a lot of potential for the weekly to fill more of this range to the downside as well. coming into the 30s. And when you're looking at price action wise, this isn't much different from some of these situations where you'd have way more sporadic pullbacks, but this is something more similar to when we were watching this bearish impulsive move, the lows printed. You have that aggressive pullback phase in double top in that area, but overall start seeing more sellers in play and continuing down. So from those aggressive sell side plays, what we've seen so far in relation to this downside move, where here primarily sellers have been in control, very minimal pullbacks. This is the first real pullback we've seen in that bearish trend we were watching there and playing for that extended period of time. We've pretty much been playing this since the April IMF meeting, when all the central bankers came together and gave that very hawkish tone and signals and rumors towards more aggressive rate hikes to come. ECB talking about coming out of negative territory, Fed's talking about normalizing back to 2.5 and 3%. We've been playing that impulsive dollar strength, that weakness in equities, that weakness in gold since that point. And the pullbacks that have occurred on dollar, equities, and gold have all been at the same time as well. But it does look like some of those pullbacks are starting to fade out against this overall bearish market structure still and macro sentiment. Now, GJ. So GJ, you can see we had beautiful buys play out, almost 200 pips from the pullback to 163, even from the break above previous intraday highs and 164, huge upside move to 165.5. We still have weakness in the Japanese yen. We have this stronger bullish market structure that's starting to form, but I'm personally not really expecting pullbacks all the way to 162.5, especially with that, especially with the fact that the Japanese yen just printed new higher time frame lows here. Right, we haven't revisited these price points, I don't think ever, in terms of the charting point that we can see with TradingView, probably not since like the 90s. But yeah, Japanese yen individually very bearish there. And it doesn't look like it's stopping anytime soon. So what I'm trying to look for is key price points of interest that we could have potential pullbacks to based on liquidity zones we have seen before. And then this is something that's still in the near term area where if we were to get a pullback to 164 flat, it would still be extremely, extremely bullish. So on the intraday timeframes, 164 is a pretty key price point of interest for me. Obviously, deeper pullbacks, you need to be trading well below there, but I'm not expecting any deeper pullbacks because a deeper pullback would be fading out this move and also meaning Japanese yen breaking back above its previous lows there, which I'm personally not expecting. Then based on intraday price action here, you can also see these little zones to the left that were previous strong reaction areas around 164.5. So I'm watching around potentially 164.5 and 164 for any deeper pullback phases. But to even expect that, we would need to be having some short-term downside moves below 165. And I'd only see some short-term pullback sells below that price sensitivity area. Because this is the primary move we've seen from pretty much the weekly open now, with weakness in Japanese yen from the dovish comments and overall more demand in GBP against the yen. So I wouldn't want to fully correct that move, but having that deeper retest in relation to this upside move would make sense, especially if we're trading back below 165 there. Otherwise, if we just have a short-lived pullback and don't break below 165, I'm just looking to extend this buy train and just continue to extend our buy bias. If we just have a short-lived pullback, something like this perhaps, and just have enough buyer volume in the market, which we can confirm with a rejection, break back above 165.2, also continuing to break above the previous little intraday highs printed there, then we know we can just extend these moves to the upside. Obviously, watch out for the PMI data overnight, which has been weaker. So that could be a catalyst for a short-lived pullback. Now, GBPUSD, we're in that similar situation. We're at this previous sell side liquidity zone here, where from these lows printed by sellers, we had liquidating of positions and profit taking, buyers jumping in to provide that exit liquidity, a short-lived pullback to this price sensitivity area that essentially led to these lower lows. As we finally had that deeper pullback phase in the dollar after such a long bullish rally and such a drastic drop on GBPUSD and EURUSD, we had this extended pullback phase where we were identifying we could come retest here, which we have pretty much essentially done and shown a lot of exhaustion by buyers. At the same time, dollar strength can be coming back into the table. But just because we're getting that exhaustion here doesn't mean we can validate the sell side liquidity is fully in the market just yet. Of course, within this range, I still want to primarily be playing the sells, but we would really need the rejections at those intraday highs and key sell price sensitivity area of interest and breaks below this 1.246 price sensitivity area to validate the sellers are in play to start targeting overall in the higher time frame back to these previous lows, right? So the majority of our dollar pairs we're looking at GBPUSD and EURUSD are in that similar situation where with EURUSD, we came to retest the previous lows at 1.08. Now, this is where it comes into play of using the dollar correlation to our understanding and advantage, where this was that last key price point of interest that led into these higher highs, which was the last Fed interest rate day. If we can validate that exhaustion by sellers from the lows and more buy side liquidity generating and essentially breaking above this rejection point and trading back above 102.5, that to me shows a lot more demand in the dollar and the macro sentiment back in play. But nonetheless, until then, GU trade ideas are the same because we had literally no price change at all from the previous daily candle. So I would still primarily be looking for sells, would only be looking for buys above 1.27. EURUSD trade ideas are exactly the same. I would still be looking for sells, only buys at this point above 1.08, breaks above the key level, which is a bit above the key level there. Now, USDCAD is in a different situation here. You can see it's still relatively bearish, even as dollar buyers are coming to the scene. But we understand that correlation with crude oil in the Canadian dollar, as of course, crude oil exports is one of Canada's main revenue sources, which obviously I talk about a million times. So as crude oil is still very bullish, I think it's still hovering above $110 a barrel, 120 actually. So it's almost going back to those Russian high prices, the Russia-Ukraine tensions when they first were coming into play there. As crude oil still at $120 a barrel, that still keeps the Canadian dollar relatively strong. And just based on technical repetition, you can see what I was showing you guys here last market update. USDCAD has been in this range for an extended period of time with some very key price points of interest in these areas highlighted, where if you don't break these high points, and especially if we have that oil rally still active, we can easily see us coming back down to these demand zones before really seeing any buyers back in play. So I still want to play that repetition, which is very common here. It happens time and time again, especially if oil's still holding at like that $120 barrel mark. So even if UCAD was to give pullbacks to 265, breaks below 255, breaks below 25, would still be looking for short-term sells pretty much down to 24 before seeing any buys. Would only be looking for safer buys, and if my main bias is incorrect, above 1.27. Now, US 30, you're going to see a similar idea. As we're retesting that previous price sensitivity area and roughly around those previous lows, you can see the exhaustion we're starting to get by buyers as we're starting to see the demand come back in the dollar, but we're really just sitting in this intraday range. We can't just validate that the sell side liquidity is back into the market, especially when VIX is relatively flat. We would need to be trading below 32,600 to start seeing the buyers liquidate out and driving us down to these previous lows, continuing that bearish market cycle. So at this point in time, pullbacks to 33.5, I'd still be in sells. Breaks below 32.6, breaks below 32.4. I would only be jumping back in short-term buys above 33.8, actually 33.6, which is a medium-term zone here, and 33.8, still watching potential sells at 34K. All right, everybody. So hopefully that makes sense for everybody. Loud and clear, everybody understanding and following along. I'm going to save and upload this, and I'll see all of you later.